like from day one of Facebook. But you're always going to try out new ideas. You gotta just stick to your plan. So, my go-to setup. Hold on one second. So my go-to setup for trading these PRs during the open is the opening range breakout or the opening range breakdown. Okay, so we call this an ORB. So how do we find these things first of all? I'm looking for a momentum stock that gaps up at the open. For a lot of you guys, you'll have your stocks to trade scanners. So you can use a scanner like Stocks to Trade or Trade Ideas or whatever you use. There's a website you can use called thestockmarketwatch.com. There will be a pre-market tab on it. Click it, and you'll see all the stocks that are gapping up at the open and the close. And so you'll see like stocks that are up 2, 3, 4, 5, 50% at the open. That's the gap up. So you want to go through those and start searching through them. So one of the things to think about when you're looking for these is, okay, I'm going through my gapper list. I'm going through my gapper list. I'm looking for a stock that's gapping up. So I look for stocks that are gapping up 3% or more. 3% or more on volume. So it's got to be trading a little bit pre-market. Most stocks do not trade at all pre-market. So you want to be looking for that gap. Okay? Now you want to be looking for clean daily charts. Okay? A stock that has a PR but has an ugly daily chart, most likely that stock will spike up, but none of the patterns will work, okay? Stocks, for your patterns to work, they have to be in zones where there's no supply, meaning they have to be breaking out into areas where there's no other chart action. If a stock is messy or it's range bound and it's gapping up into that range, you're gonna be hit with a level of supply and the stock is not gonna move clean. So a lot of times when people are looking at intraday charts and they see this amazing pattern and they get smacked down, the reason is because the daily chart was not clean. And so there's levels of supply coming in on top of that stock that knock it down. When we look at these stocks, we need the cleanest stocks, okay? The cleanest stocks. Stocks are like people, okay? If they are clean, they look presentable, guess what? They tend to be predictable. Right? You see a white guy with doctor's pants and a nice golf shirt? That's a predictable guy. He's clean, he's crisp. You know what he's going to act like. You see a hot, sloppy person, unpredictable. Stocks are the same way. If you see an ugly looking stock where it's all over the place and it's in a range, that stock will not act predictable where you can buy the patterns and then they're actually going to move in the way you want. We need stocks that break out in clean manners. And so I always look at it. If a stock has very weird action, its candles are all over the place, I stay away. Because if it acts like that all the time, what is it going to act like when I get into it? It's going to act the same way, right? So if it's acting all haphazard and messy, now I'm going to get in it, it's going to act the same way, and that's going to cause me stress, which is going to lead me to bad trading decisions. Trading stress leads to bad trading decisions. That's when you make those emotional decisions that screw up your trades. We want to be in clean, smooth patterns because now when we're in the trade, guess what? We also are going to act calm, cool, collected, and not overreact to every little thing because that's how our stock is, okay? The worst thing you can do is get into a stock that just spikes up, it spikes down, it spikes up, it spikes down, and you have no clue what's going on. You know what ends up happening? You get the spin cycle of despair. You end up chasing the stock up, it spikes down, you sell it, then you chase it up, you spike down and you sell it, or vice versa. You short it too low and it spikes up and you cover it. You're in that spin cycle. And that's what happens when you're not trading clean stocks. The short setup of this is the exact same way. So when we look for a stock that gaps up, I'm looking for 3 candles on a 5-minute chart minimum of consolidation. It can look like a flag, a base, a box, whatever you want. You want 3 candles minimum of consolidation at the open. Once that range breaks, now I want to buy it. Now a lot of people probably trade off 1-minute charts or 2-minute charts. Can you do this type of pattern on that? Yes. But there's always a caveat. There are like 10 good 1-minute chart traders in the world. It's too zoomed in. You see too many patterns. 1-minute charts make you overtrade. I used to trade 1-minute charts all the time. I'd look at my ledger at the end of the day, I'd have like 200 trades on there because I would see flags everywhere. And then that was the first pattern I learned. I'd be like, oh, that's a flag. Buy, sell, buy, sell. Everything looks like a damn flag when you're on 1-minute charts. It doesn't work. It turns you into a scalper. There's no money in trading when you're just dealing with pennies and scalping around. The commissions will eat you up. Then the tax man will eat you up after that. You don't even want to be in that game. When you trade with longer term time frames, 5-minute charts, 10-minute charts, whatever it is, now you're getting elongated moves because you see much less patterns. And then when they go up, you get a bigger percentage gain. But everybody wants to trade the 1-minute charts, they want to be scalpers and kind of weave in and out, sashay around. Well, guess what? The more trades you make, the more you're giving yourself an opportunity to fuck up and make a bad decision. That's how I am. You know, if I put myself in too many positions and too many trades, it's that one trade that gets away that fucks me. I've got to do everything I can to stay out of that situation. So I want to take the best trades, the best, cleanest patterns at all time, which means I want to trade a little bit longer time frame, so I'm not sashaying around like a gypsy trading all these 1-minute charts. 1-minute charts will make you overtrade. So if you're an overtrader, anybody overtrader here? Raise your hands. Don't trade 1-minute charts. Get away from it. Trade 20-minute charts, 30-minute charts. I got one student, he wants a day trade. He's so bad at 1-minute charts, even 5-minute charts, I said, you gotta use 30-minute charts. He trades pretty good. He only gets like 2-3 signals a day. Can't overtrade then. And he takes bigger, elongated gains. It keeps you away from scalping. Okay? Scalping is great if you got $1 million and you can afford the commissions. But if you have $5,000 and you're sitting there, scalp, 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 you're not going to have any money left in a couple months. All right? Your game when you have smaller accounts is different than somebody that has $1 million. You've got to go for the best patterns, take the chunks, and keep building your account $100, $200 at a time. See, everybody wants to get fucking rich off their $2,500, but it doesn't work like that. Right? When you have $2,500, $5,000, your goal is to make $100 a day. That's the hardest thing to do in trading, learn how to make $100 a day. Learning how to not lose. You can make $100 a day. I can show you how to scale from 100 to 1,000 in 10 minutes. That's the easiest thing to do in trading, is to go from 100 to 1,000. The hardest part is to go from nothing to 100. But that's your goal when you have a smaller account, is to go and just make $100. And you know what happens? You do it every day for the course of the month, guess what you got? You almost doubled your